This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
That's what brings the viewers back. That a boy.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
Good morning, everybody. It's Wednesday, August 13th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. We'll be sure to get to it during the show. Overnight markets here, September corn up 2 at 373.5. September soybeans were up 11.5 at 1024.25. And September Chicago wheat was up a penny and a quarter at 506.25. No export sales announcements here this morning. So we'll jump right in, guys. I think, everybody's still, talking and I guess digesting the big shock on yesterday's report. Certainly, to some came in the form of the yield, came in the form of acres. There was just a lot there. Certainly, I would say changed the scope of the game here for a while. And outside of that, other big news, Putin and Trump were inching closer to the meeting here on Friday in Anchorage. And I know that European leaders are scheduled to talk with Trump here today and get ready for that meeting. So should be interesting on Friday to see what the headlines are. Justin, I guess now that we've had a little time, to digest and talk through this report, what are your thoughts as we, march on?
Yes. Well, I'd say as I've had time to digest, I feel the same. I think beans continues to gain on corn, and I think bean breaks are bought. Corn rallies are sold through the month of August. I do think we're getting into some real value areas here. I mean, the fact that corn's up to, I think is showing how much we've already beat it up going into such a shocking number. It could have easily been another 15 cents lower or more yesterday with those kind of numbers. It was a shock to, even the bears, I think, were shocked on the numbers. So I think it shows you just that this time of year going into first notice day, the natural forces at play there, how much we've already been selling and bearish. Beans, I think, will catch a bid. They've just got done selling a big slug of beans going into that report. And then the weather's maybe not the best for some areas for an August finish. And then with these numbers, you don't have a buffer. So we're writing down a record yield, still tight carry out, all the things that we talked about yesterday on the show. When you look at things like wheat, wheat made contract lows. I think wheat's getting competitive in the world. Corn's obviously competitive. We're getting to prices that are just, no matter what metric you look at, are very inexpensive or cheap. So how low can we go? Right. That's the question. And I think it's going to be hard to go as low as people think could be possible just because of all the things we've talked about, the government programs. Dustin did a great job in our letter to our clients yesterday for guys that have, really high crop insurance, a little bit of hedges on, like made money yesterday in corn on the break. Right. So we're into that double, triple payment area for growers that have done that. And that's not everybody, obviously, but even at the 85%, if you just had RP 85, right, you're at the money, in the money. So really hard breaks below here certainly can happen, but I think until crop insurance expires, it might be hard to get a lot cheaper. And if anything's going to make us a lot cheaper, let's do it. I guess, we've got record acres, record yield. I have a hard time when I look at the state by states. I don't see how some of these states hit those numbers. Now, maybe some of the states are underrated. I haven't obviously walked fields in every state, talked to clients in a lot of different areas. Obviously, Wisconsin's great. Iowa looks great. There's some issues in some parts of Iowa. I have a hard time to believe Illinois is last year's yield, let alone a record above it. So, and Indiana, Ohio, I mean,
Minnesota, Kentucky, the
yeah,
list goes on. I mean,
I think the list goes on. My guess is that was the high print, personally. But again, and the fact that it's on 97 million acres, and the extra 2 million acres came from, Kansas, like areas that aren't the highest yielding areas. So I think that's probably why we weren't limit down.
well, and you want to talk about record yields on corn side. I mean, look at the record yields for bean side. It's the same kind of list. I mean, you got Illinois, Michigan, Missouri, I mean, Minnesota, Indiana. I mean,
Yeah, right.
List goes on.
Yeah, I mean, I think Jason said it yesterday. It was such a shocking report that when we did the special bonus, and you're still trying to collect your thoughts, but yeah, I think that's why we were, down 10 at first, just looking at the yield. And then I think everyone's like, wait, we lost 2.5 million acres. And like, who cares what the government writes down on August 12th for bean yields? Like, let's see how we finish. And I mean, even the best farmers I know don't have any clue what their bean yield is.
Right.
So we'll see. I mean, now we're, okay, we're trying to digest this, and we're going to start getting these crop tours, which we've been talking about here for the last week or so.
The got a nice comment from Dan Bingham here this morning. We're not swinging a huge stick, but I would say Kansas yield print may be low by 10 or more bushel. Yeah, Dan, you guys have got a great profile of water down there through Kansas, and we actually talked about that, Justin, yesterday after the report.
Oh yeah, I mean, there's no doubt. I mean, the Western Belt is fantastic, and I know clients in Kansas, Nebraska, the dryland, areas that could be, horrible in a lot of years are fantastic. So, I mean, there's no doubt. I think, that's just the question though, is how do you, that many acres and a record yield by 10 bushel, it's going to have to be phenomenal, in a lot of areas. So we'll see once we get, people in there and actually getting some good feedback, boots on the ground.
Justin, I thought you brought up a great point here early this morning, and I guess it opened up to everybody too, is just, has the mentality changed? We've talked about so much of, the storing corn, selling beans, and will some of that mentality change now post report?
Yeah, it's a good question. I'm trying to debate that in my head. I think we've talked about on the show a lot, recent history has been selling beans off the combine and storing corn, just for a lot of different reasons. Free up cash, not having to deal with soybeans, whatever the reason may be. You have super wide carries in beans, and corn's building that now. I'm just wondering what that mentality is going to be. Beans look like they could have a story. Does the farmer want to just dump beans to free up cash, or do we end up? My theory is that we're going to end up with a ton of basis contracts
on the corn side. Yeah.
If prices stay here or lower, that we're going to see a ton of basis contracts get entered this fall to free up, whatever, depending on the location, 60, 70% of the value to be paid up front. That's my guess. And I'm thinking commercial storage rates are going to get super expensive in certain areas.
And Ben, shaking your head. What's on your mind this morning? Let's unmute here, Ben. Like, you got this. Attaboy.
I always think that it's going to be like an auto thing when I go on. Anyway, I think the soybean market, and you have to get out of your head relationships, corn and soy, because I think we're going to see some probably record differentials in price at some point. The soybean MO has been 3 to 4 day rallies, sharp rallies, and fail. Since May, it's happened 5 or 6 times. But yesterday we went from, we had a short that piled in last week that went from being 30 cents in the money to 20 cents out of the money if you're going to use the 200-day moving average as a barometer. So I think they're kind of on notice. And I'm not sure with the report that we had yesterday that that someone wants to throw more money at being short it to kind of defend that position. So I think that's interesting. The corn market, whatever they give us for the yield is what we have for today. I don't see records in Indiana. Ohio, not going to be a record, but again, I think there's still some issues there. Corn's going to sit down here. We're going to do a lot of business. My biggest fear is that logistics in South America have been busy moving beans, and all of a sudden we get to a point where everyone starts moving corn and our gut slot harvest, which wouldn't be a bad thing with all the safety nets that are in there. But I agree with what Justin said about shocking that corn did not get beat up yesterday. That is a massive shift on a report. Yield blows it out of expectations, and they add 2 million acres. So maybe we priced a lot in, but we're going to have to move a lot of corn. We're going to have to sell a lot of corn, and we're priced to do so. It probably just takes some time to sort through it.
Yeah, that's a good point. You reference acres a number of times. And Dustin, we looked early this morning, and I know yesterday afternoon at FSA data, and it was interesting to see where that came in, and just I guess the trend for the potential, that corn acres could continue to increase, and the shocking, drop in bean acres. So I guess what are your thoughts?
Yeah, so we the reason we had these big swings in acreage is the FSA data came out, and it's quite compelling, right? They really missed the June survey versus what actually happened. So I think the market is still catching its breath. I mean, what this means, we had a major rally in the ratio. We're having a further push on that ratio overnight. We've had strong crush margins coming into this. We also have it corresponding with the high of the year so far in the Brazilian real was yesterday too. So all of a sudden, we have a little bit of tailwinds behind the bean market, obviously tremendous headwinds to the corn market. We talked about this in the letter, but for our base, a lot of our customers are centrally located, and, by nature, a Central Illinois grower is typically going to have a much higher base acres for corn. So a high ratio kind of helps them in a way. This is one of the better things you could have happen if you have really good policies, and you obviously need to see some sort of a build in demand, through lower prices. Best cures for low prices, low prices. We're going to go try to find that demand through low prices, seems like. But if you're talking about why is it the best case scenario, let's say you're a grower that has 80% of his or her base acres are in corn, and your modern rotation is more of a 50-50 rotation. It means a lot of your base acres that are corn base acres have beans on them this year, and so you're getting paid on that base acre of corn, even though the bean market may actually be fairly good right now. I mean, there's a chance that we go out and, in my view, we go back up to the high end of the range for beans, maybe even take that out, maybe the calendar year high, which is not too far away. We're on a pretty good trajectory to do that. So if that's happening where, beans are, 2.8 to 1 or even 3 to 1 to corn, an example would be like $12 beans to $4 corn is 3 to 1. The unintended consequences of having a strong farm bill policy, strong crop insurance, and then maybe a decent bean market would be, I know I'm kind of painting kind of best case scenario right now, but I really don't disagree with that scenario as a possibility. And so that might be one path to profitability, is that if beans all of a sudden get exciting, there's a lot of people that would say we got a long road ahead of us because bean demand's been so poor. Our exports have been so poor, and I know Trump's actively talking about trying to get China to buy more beans. So we'll have to see where that goes. But I don't know. I think it's the best thing to do is just run through scenarios, see where you stand with your advisor, and try to do what we've been doing the whole time: fill the gaps, fill the holes of where the plan is. But I'm not even though it's such a surprising report and it creates a lot of commotion, there might be some silver linings here to it.
Well, just that point, Dustin, even, if you have a, good bean crop, which, the government's saying we have a record everywhere. But if you have good bean yields, which I think a lot of people do, you look at July beans are approaching $11, right? So there's basically a 70-cent carry from September to July. So if you have really good beans and you have storage, like selling some $11 beans and, buying some calls or something for the summer market, or even spring market, looks pretty attractive here, right? If you can store it and earn that carry and you're selling $11 beans, the chance of something happening, because if you get that ratio super high, right, you'll get more bean acres in South America, and that's kind of keyed off of that May, July timeframe. So I think there's some interesting ways to play this if you have, depending on the tools that you have available. So trying to be optimistic about what, Ben always says, don't trade the market you want, trade the market you have. And that you have to look at what we're presented with and what's the best way to trade it.
Yeah, that's a great point, Justin. And as always, guys, give us a shout. You just want to bounce some ideas, talk about some of the things we're visiting about. Just give us a call. We're running through these scenarios every day. And so with the market moving, obviously it's before harvest here. Let's figure out what the path is. Very good here, guys. We'll quickly move over to livestock. Ryland, the same song and dance for cattle and chopping around in hogs. So I guess what are your thoughts here this morning?
Yeah, so beef market just exploded yesterday. And I think some of the data that was being presented in the WASDE report helped to kind of support what's happening here, right? We're seeing slaughter rates still stay pretty tight. There's Brazilian tariffs that are really going to hamstring kind of those imports coming in on the beef side. So we've just seen this huge explosion. And I think just the market reaction at this point, just kind of coming back. We've already kind of taken back half the break that we saw last week. There's still a lot of cash optimism here. I know it was a little bit on the weaker side last week, but just with the price action that we're seeing right now there, I think that's kind of likely to lead to some better prices, if not steady prices this week on the cash side. But the WASDE, like I said, just there wasn't anything really that fresh or anything to really change the perspective there. They did reduce 25 production by 260 million pounds, 26 by 350 million pounds. So just more of what we kind of already expected: slower slaughter rates, lighter slowing placements, and potentially lighter carcass weights. So just overall, that still kind of culminates to feeding this bull, as it were. So naturally, likely to see some strength here and just waiting for the cash market to really pick up. But hogs, yeah, you've had kind of a mixed bag, a little bit of mixed emotions here overall. So yeah, it just seems like it's choppy, starting to move a little bit sideways. The trend still ultimately firm right now, but we did see a pullback in carcass and in bellies. Bellies were down, coming off that 200 level, down about 745. So I think that's really where a lot of the focus is going to be, if these pork prices can hold up here for right now. But what are they going to look like in the next few months? And I think generally speaking, the market's still expecting a little bit of a correction here as we kind of move outside of grilling season. But one other thing to note, at least on the WASDE, one of the big standouts was that they reduced the 2025 pork production slightly. So, I think just at this point, that was pretty much it. And it didn't seem like there was anything really to kind of move the needle at all. So it's still just kind of expect choppy trade, kind of watching for midday carcass for direction in the second half of the day.
I appreciate the update there, Ron. A couple things to note. Tomorrow morning, we'll have weekly export sales. Those will be out at 7:30 Central. We'll take a look and visit about those in the war room. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so. It'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. Dan and James, thanks for the comments here this morning as well. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.